Hey guys, welcome to this week's podcast episode for the Financial Freedom for Physicians podcast. And today's Juneteenth. I'm really excited about today's guest is Dr. Jay. He's the founder and CEO of Digital Wealth MD. And like I said, I'm always looking on the cutting edge, people trying new things, different things, learning, experimenting, and trying to push the space forward. So he's going to talk to us all about blockchain, decentralized finance, and some of the fantastic, interesting things that physicians are doing in this space. So, Jay, welcome.
Thank you, Chris. Really excited to be on this. And I would like to share my screen here. And here is my presentation. Okay. Thank you for this opportunity. I'm really excited to share all that I have been doing in this space. And so I'm a physician cardiologist, imaging cardiologist, and been in medicine for almost 30 years since medical school. And I still love medicine and I enjoy helping people. I enjoy my specialty, my imaging, echo, MRI, CT. I love all that. But there's always what's next, right, in our field. And a lot of our physician friends are doing real estate investments, options, stocks. But I kind of gravitated. I've done some of that. I have some of the properties and some of the tradings that I do, but I've gravitated and enjoyed this digital space a lot. And I'm trying to grow that much more because it's so fascinating. It is growing, in exponential space. And I am learning more about it day by day, and I want to share more with my physician friends and what this is. So I've been to this space for the last 2 to 3 years and done various investments, learned from various peoples. I've been to the Bitcoin conferences. I've been to other blockchain events and trying to go more and more of those. So, I want to share some basic principles of blockchain today. And then, we can go more into it as we have questions. So I created Digital Wealth MD, and our purpose and sole goal is to educate our busy physician friends in this space and see. I mean, this is an exciting space where people should invest, somewhat. And because, as you know, diversification is the key, right? If you tell me that there is one good stock which is going to go exponentially high, you probably just won't invest in this one stock. If you tell me this is this one big property in the best, part of the country, which you think will do really, really well, you wouldn't just invest in one property, right? We all have our, retirement wealth or S&P 500s. We do all different kinds. But I think diversification is the key. So that's what I felt, that at least 5 to 7% of your portfolio should be in the digital space, especially since it's growing so much and there's so much to learn. It's fascinating. But the thing is that there's a lot of fake stuff in there that you need to get vetted on. And so it's good to have a physician who is doing in this space, so that I've been done this and I can say, okay, this is not good, do not go into this. Of course, it's a high risk space. There's going to be some stuff that are not going to come in that. So before I talk about anything, it's a disclaimer. I'm not an advisor, not a tax advisor, not an attorney. I'm still a physician, and this information is educational only. And if you want to do anything, do your due diligence. It's mostly educational today. You can lose all your investment if you do in the space, but that's my disclaimer to start with. All right, so we'll start with blockchain. What is blockchain? It's basically a digital ledger. A ledger is a book of in the accounting space, which has all the records, that contains all the records. And that ledger is across multiple nodes or computers, and it provides a timestamp, universal, immutable record that is managed by just not one entity, but a cluster of computers. And it's recorded forever so that it cannot be altered, it cannot be changed, and it's probably prevented from fraud or other third party coming into this. So it's pretty transparent, as you see. So let's see how a blockchain really works. So here is an example of a step-by-step process how a blockchain really works. A user requests a transaction, and a block of that transaction or information is created. And this block is then broadcasted to all the nodes of the network. Nodes you can probably say as if like a digital computers. And then all these nodes get validate the block and the transaction together. And then the block is added to the chain. So chain is based on cryptographic principles, and this is how the transaction gets verified and executed. So you create a blockchain which is verified by multiple sources. It's not just one third-party entity, but it's up there, and it's up there for anybody to see it, to verify it. It's clear, it cannot be changed, it's in there. So that's how a blockchain is step-by-step created, right? So it's decentralized. There is no central authority governing it, and it's basically very trustworthy, because you see, this transaction has been verified by multiple parties. There is really no need for a single third party entity, and that third party entity, there is no real ability to commit a fraud in there. It's transparent because all participants from every angle can view this transaction on the blockchain, which kind of promotes the trust and accountability significantly higher. And is secure because, this blockchain is really secured through advanced cryptographic algorithms, making it really tamper-proof. And once a transaction is recorded, it really cannot be altered or deleted. So I know people think, oh, we don't know what blockchain is. This is all fraud. I think this is really pretty clear in the digital space. It's recorded. It's much more tamper-proof than we can think of. And the utilities are numerous, which is coming along. Just to start with, I know real estate is a popular vehicle for all our physician friends, but blockchain is really coming in big way in the space. I know, just to take the example of title companies, I think they are freaking out now, because I don't think there will be, 5 to 10 years down the road, there will be need for real estate attorneys or title companies, because we'll have blockchains that will record, track, and transfer deeds, titles, and ensuring that all these documents are accurate and verifiable. I think that's already happening, and it's going to continue to happen as such. And healthcare is our field, and I think it is going to be slow to catch up. We are, conservative in the medical field, but I think it is catching up. I mean, artificial intelligence is a whole different talk, and that is also catching up in the healthcare field. Is going to be a big in that. And same thing with blockchain. I mean, allowing providers, hospitals to share access, patient care documents without compromising security and integrity, that's huge in this space. The other two spaces I wanted to bring up is in the voting space. We have talked so much about, voter fraud and inaccuracy. I think blockchain will take that all away in many aspects. So just to give you a glimpse of what is coming in this industry, which, take it or not, it's not going to go away. So that's about the blockchain. And let's give a little introduction to what cryptocurrency is. It's not all blockchain, right? Cryptocurrencies, they provide an alternative to fiat currencies and offering benefits such as decentralization and lower transaction fees. Its transactions and records are maintained by a decentralized authority. But basically what they are a peer-to-peer system that can enable folks to send money and receive payments. And there's where the banking system is coming into place, right? Right now, we have our banking system, which controls most of it. But down the road, as peer-to-peer currency becomes more popular, cryptocurrencies can be sent from one person to another, organization taking control of that. That has its own advantages and disadvantages. So you have to be extremely careful when you send stuff to somebody, because it's not reversible, because it's decentralized. And we're going to get used to doing that. I'm not going to go to the total, all the, how it works, but basically, what is so coin, like a Bitcoin is a coin, right? It transacts on its own blockchain. So Bitcoin blockchain it's a coin. But a token is separate. Token uses a different blockchain than its own. Like, for example, Ethereum. Ethereum has its own blockchain, and Ether is the gas fees for Ethereum. So we have to kind of identify in this world what is the utility of what asset, right? What is the utility of a coin? What is the utility of a token? And we cannot just go on, there are a lot of these hundreds and thousands of these tokens and coins that they come up and then hype them and then they fall down and lose money. But we have to get in the back of it and find out the utility of these coins and tokens. For example, if you take Bitcoin, right? I'm going to skip off these, but go directly to Bitcoin, which is the number one token as such. So, there is a lot of, talk about that. Okay, Bitcoin is, it went to 67,000. Now it's 26 plus, and we all should own Bitcoin, and, it's going to go to $1 million. I'm not sure about that. I know Bitcoin enthusiasts will kind of disagree with me, but when Bitcoin first came in, had a lot of utility, right? It was the only blockchain, and everything had to go to that blockchain, on that original blockchain. It had to be validated. So all transaction, had to be gone through that. So it used to get paid gas fees, right? But now there are a lot more altcoins, a lot more smart contracts. And so what are nodes? Nodes are basically custodians of a blockchain. They keep copies of the ledger in sync, storing those data while taking on more blocks for growth. And they are programmed to execute the transactions on a majority, consensus basis. But now let's talk Ethereum. Ethereum is the second most valuable smart contract, right? It is basically a smart contract. And people are developing more algorithms, more tokens, on their smart contracts. So, for example, if you have a tollway, which is owned by, say, the state or a particular state, and any car that passes through that, you have to pay gas fees. You have to pay fees to that tollway, right? Same thing. So Ethereum has and owns this smart contract, and anybody who develops a program or a token or anything else on their smart contract, you have to pay gas fees to them. And the gas fees are paid in their token, in their coin, which is ETH. And that's why I feel the Ethereum value is higher than Bitcoin, because it has a contract and people are going to continue to develop the programs into their smart contracts, which is going to really keep on increasing their value as long as people are developing that. For example, if you take, if anybody has used Tether, USDT coin, right? USDT coin could be bought under different networks or different smart contracts. You can do it under the Ethereum smart contract, so it's ERC20. You can do it on the Tron contract, which is TRC. Both can be done differently. But because the Ethereum network is so congested, it is so busy, it's supply demand, right? There is higher fees for ERC20. Lot of the programs or opportunities are now moving away from Ethereum. They're trying to do TRC, they're trying to do USDC coins, just because of the busyness and how the Ethereum network is so congested and is costly and expensive. So there are going to be networks and smart contracts that are going to be created, which are going to be working faster than Ethereum, which are going to be less gas fees. And that's what we are going towards. So for example, supply and demand is a thing, right? So we talked about the challenges. We talked about, Ethereum and gas fees. We talked about, Bitcoin and nodes. And, there's another mainnet that I am kind of involved in called the G99 mainnet. And that's a whole different, topic. We can talk about that more. But I want to go over this slide a little bit because this kind of explains, what token and what coins are like. So number one is still Bitcoin blockchain. We talked about that. Number one. Number two is Ethereum in this space. If you're trying to own this space, and that's a smart contract, is number two in that. We talked about Ethereum, how congested it is, busy it is, that people are trying to draw. But look at this. Number seven in value is Cardano or ADA. It's also, so what happened is the same guy who kind of, was in Ethereum, he broke off and he created his own smart contract. ADA is probably, not as popular as Ethereum, but it's going to get there sometime. And, it's less congested, less fees, less expensive. So it's similar smart contract. People are trying to build, on this smart contract in this platform more and more. What is Ripple? Now, Ripple is, XRP is used in the banking and finance sector a lot. So that is being used in that. And I think when this goes more and more, Ripple will be more popular, and it will grow in its value as such. Now, Solana is completely a DeFi, decentralized financing. So again, to explain in layman terms, DeFi is decentralized account. So if you, for example, MetaMask is a wallet, which is decentralized. You only way you get into MetaMask or own MetaMask, you having the seed phrases, the 12 seed phrases that you create when you open that account, and you save them, you engrave them, laminate them, keep it someplace, because if you lose that, you lose your wallet. Nobody knows who owns MetaMask wallet. It's decentralized. Same thing, there are other DeFi wallets like that, like Exodus, like SafePal, and there's a names of few, and MetaMask. So that is completely decentralized. And people who are in the space, know what decentralized, is, how valuable it is. So there are applications like Polygon-matic in that decentralized world. Litecoin is number 12 in the space, and it's fast, secure, and low-cost payments. Avalanche is also a smart contract, particular exchange, C chain, P chain. Now, Uniswap is a decentralized exchange. Like Coinbase is a centralized exchange, where you have to do your KYC and come in, and then you can exchange certain coins, not everything else. But Uniswap is a completely decentralized exchange, and you can do similar stuff, but you have to get through your seed phrases. Nobody knows who is owning that, right? Same thing, there are the metaverse, the whole community. There is an example of metaverse. It's called Sandbox at Decentraland. And Sandbox has apparently 300,000 users. Decentraland, similar Upland. Decentraland has, around that many users as such. But so these are the projects that, gives you a baseline idea of the blockchain world, and, why this asset class, this ecosystem is not going away anywhere. And I know we in the United States are going through some regulation changes, and we are, I think, a little behind in the Europe. Europe has already gotten up their act, and they have the MiCA regulation, which they know that they are not able to, stay behind in this world. So they're bringing in regulations much more faster. There are stores that are opening up. People are using it much more. I think we will catch up to that at some point. But this asset class, this ecosystem, I think it is really valuable to pick up a small portion of this ecosystem, learn more about it, while you're doing your other asset classes also. Now, this one also is a metaverse. Upland, I was talking about that Upland. What metaverse does is it offers opportunities for the investors and gamers. They can sell non-fungible tokens. I'm not going to go into the non-fungible tokens. It's a whole different talk for a profit, and gamers can earn and play to learn. So you want to really, want to hold an event. This is actually, it's a virtual world basically that is creating. And I'm part of some of the programs that are like that, an ecosystem called GS Partners that, I've been involved in. And, I can show some of that the next few minutes just to give an introduction, but that'll be a whole different talk on that aspect, by where people are kind of creating this virtual world where you can, gaming, sell some products in there. That's coming up. It'll maybe take a little more longer to catch up on that, but those will at some point come up as such. To show you the other stuff that I was going to share is, this is the ecosystem that I am involved in, called GS Partner. Of course, you buy certain certificates on that, and I'm not going to go to the details of that. They have their own bank called the Swiss Valorum Bank. So this bank is, they partner with this bank. So apparently the company which has a bank, it takes a lot to kind of own. They're trying to get a bank in the US where you can wire your money and then get USDT and get into certificates. But they have kind of interesting products, called the certificates, which are interesting, very interesting, because what they are doing. So GS Partners is a blockchain or an ecosystem in its own, parallel to Ethereum. They are not as popular as Ethereum, but I think they are trying to get there. They are more popular than Upland or Sandbox because they already have 500,000 users, and they're growing as such every day. But for example, I can just show you, this is a water certificate. And what the certificate does, gives you an option, invest in real estate. So here is a water certificate. And once you purchase it for $1,000, that is your key to that certificate, you then load the certificate with another $1,000, and you say, I want to invest in fintech. So I was in Dubai with this corporate people of this company a month ago, and I met all these people in person just to know what they are doing. And this is their ecosystem. So you invest in fintech, you can invest in real estate. And once you start with a $1,000 certificate, you put in another $1,000 and you invest in commercial real estate, you could possibly get that. But I'm not going to go into the details because they are a compliant company and they want this to be presented in a compliant fashion. So I don't want to probably break any compliance rule. I just wanted to give a glimpse of what that is as such. But just to go over those basic stuff, and that is not just one thing that I am going. I like diversification, as I said. I have my little multifamilies. I have my land in Texas, actually, in Dallas. Have my stocks guy who does my retirement stocks option, S&P 500, all that. But I like to diversify in this space a lot because this excites me. This is fun. The blockchain and the wallets. And for one more thing, I kind of did not mention is when you are doing the wallets, all these wallet transactions have a hash ID, which is in the blockchain, engraved. So you go to that hash, particular wallet, you can exactly follow what money was sent where and how much and all that stuff. So it's pretty, transparent as such. So that's what my interest has been. And this is not just one product that I discussed, but there are many other opportunities that that I'm kind of involved in, and I like to kind of vet those projects before I even talk to anybody. This one project I discussed was I've been in there for 9 months, and I went to Dubai to meet those people to discuss those. There are other projects that I'm in like 1 month or 2 months, and some of the projects I've lost money in it. I mean, that's what I kind of want the diversification, and not just one of them could be solid and good, but there are I like to be in 4 or 5 or 4 or 5 of these projects, or at least I know, okay, if one of them may go bad. And my principle that I have a whole team that kind of helps people who are interested to come into this project, and hold them, my virtual assistants that are expert in there, and they can walk people through to get into some of this project. And just don't forget that even in Fidelity, if people just want to have their Bitcoin and Ethereum, they can possibly nowadays have it, and don't have to do much more, just to go into Fidelity and have that. I was just reading something in BlackRock in some weekly news that they are trying to get an ETF of their own, right? So there are institutions that are coming into the space, and you don't, if you feel like Fidelity is where you stay, you can just go there and buy some of these assets and have a small portfolio. And that, I like passive income a lot. I think passive income is what kind of gives you the financial freedom. I do have some long-term investments, down the road that are maybe there, but I'm right now focused on passive income, weekly, bi-weekly, monthly incomes. So these are the projects that I'm kind of involved in that are more to that I could talk about, much more longer. But if anybody is interested, they could reach out to me, and we could, talk about it one to one, and see if, this may not be for everyone, because this has a whole different line, whole different angle to it. You have to have the guts to be able to lose some money in there. And of course, I always tell to my friends and family that do not afford to put in as much as you can afford to lose in this space, and keep it lower in that 5 to 10% of your portfolio, not more than that in any way. But it gives you a little, that I enjoy that space.
Yeah. Yeah, really great. And I think really for physicians, because we know generally we're risk averse, and kind of showing these new frontiers. We have about 3 minutes left, but one questions physicians may ask is, because you talked about diversification, so of course not putting all of your 100% into these risky, but having some exposure, like 1 to 5%. Do all physicians need this, or is just kind of ones looking for extra alpha and more gains, kind of like you said, diversification?
Good question, Chris. I think not all. I mean, some people may be happy with their real estate and their stock folio, and they are really doing good. But I think if you don't change, or if you don't model yourself, mend yourself, you're going to be behind in this space, right? AI is coming in, and if you say that no, we're going to be totally averse of AI, we're going to shut down our thing, we're not going to think about AI, we're going to be behind. So same thing in this space is evolving. And if you don't want to learn about the space, I mean, that's totally fine. I mean, you can be in the real estate and other space, but I think you're going to be a little behind if you don't get into the space.
Yeah.
That's what my thinking is.
Yeah. So how can physicians get involved? Like just start learning, or kind of putting money down, or just kind of understanding the terms and concepts, and knowing that this world exists where doctors are actually, and people are actually creating a lot of income and wealth for themselves. What are your thoughts?
Yeah, absolutely. I think, having ears open to that, I mean, Googling, YouTubing what this is, the blockchain technology, digital space, all this is very helpful. And the best thing you can do, learn as much as possible. But unless you put your skin in the game, it's hard to learn. So you got to put some money into it. And even if it's in the side tracks, learn about it. Even as I said, just put some money in Fidelity and or other good retirement platforms. Wherever there's availability, put some money and see how it grows, and that'll give you a little knack to learn about the space a little bit.
Yeah, I love that, skin in the game. Just not too much where it's what you can afford to lose. How can people contact you, follow you, check out your website, reach out
Absolutely.
to you?
Yeah, I have my website is digital web, and I can put it in the chat. And they can go to my website. Is still kind of in the process of getting this thing. I can put I'll have my Calendly link in there, and my Instagram account at Digital Wealth MD.
Yeah, and for all the audience out there, Jay's resources will be in the links and show notes, and it's great to kind of get physicians exposed, like you said. If we can keep our blinders on, but the world is changing, and especially with AI, it's going to really change a lot. So we have to keep our eyes and mind open. We don't have to put everything into it, but at least understand that there's different avenues, and again, technology is changing very rapidly. And with that, thanks so much for coming on to the podcast.
Thank you so much, Chris. Love having it. Appreciate it. Yeah. Looking forward to talk to you more at some point.